Bitcoin is sustaining its massive move off the lows from late last year. And the question is, are we going to continue higher? Is there a short-term correction coming? And what does the stock market, if any, have to do with this? Because we are also at a very, very critical level in the stock market that I do believe is about to break. So in this video, I'm going to share with you my opinion based on the facts, data, and charts. And I'm also going to show you one really, really important metric that I'm telling you will probably change your perspective on how you're going to invest over the next 12 months. And unfortunately, I do think that a lot of people are going to get caught on the wrong side of this because they literally have not seen this one simple chart that I'm about to share. So make sure to watch all the way to the end of the video. And if you think there's someone else that will get value, why not share it with them? So off the lows, obviously, we formed something very, very similar to 2018, and we're not all the way out of it yet because we also saw something a little bit similar in 2015 as well. But we saw the big sell-off, we saw the low, then we traded higher, huge move off the U-shaped type recovery, and then we traded upwards, higher highs, higher lows. It looked like we were having divergence up, did not sell off, and just kept going higher and higher and higher. We were up a 340% from the lows, about 179% from just this first little flag area that we just formed right here, right? So we had the low, U-shape, bang, huge move up, higher highs, higher lows. Looks like we may sell off. Nope, we go higher. Same thing, we're trading in this range now, and I do believe that we're going to continue higher. So the question is, how high can we potentially go? And actually, the big thing that people are not paying attention to is this next break is going to be a very, very big break. If you look, we are perfectly trading at resistance. And that's why I believe we do have a rejection at this current price point, because we did come above FTX highs and now we're just kind of sitting here. So once we do break this, I think about 95% chance, if this is broken, that we go to at least 25.5. So I think that is a very, very easy long trade. Setting a conditional long once again above that. If you were watching maybe my TikTok live or just on Instagram, made about 20 grand just from this conditional long to where we're at now. And that trade is now officially closed. And once again, I'll probably set another conditional long above this to about 25.5, because I think it's a very, very good opportunity to catch that nice little margin that I think is almost a guaranteed home run type of a trade. Okay, after 25.5, I think that's about honestly over a 90% chance that we head there. And assuming that we do break this level. And either way, I do think eventually we'll make it. But on short-term trading, I think it's pretty high probability. The next level that I would be looking at is about 28,100, which I think is about an 80% chance. Next level is about 32,500, which I'm putting, anywhere between probably like a 65 to 70% chance. And then all the way up here, right around 48,400, I think is actually somewhat likely considering how high these previous bear market rallies have been. I mean, this wouldn't even be anywhere close, even if we had this type of rally. Let's see what percentages would be. From the low here, this would put us at 213, about 210%, okay, from the lows, which honestly wouldn't be that crazy. I know it sounds like a lot, but for bear market rallies, really not that crazy. So I do think that that's about a 50-50 chance. Maybe we're approaching the 60 percentile type chance of that range. If we do head up, I am taking a significant amount of profit if we do head up there, because I understand how the markets work in the bear markets. We just have a really big range that we trade in for about a year and a half, 2 years, where there's a lot of opportunity for these really, really big swing trades. And that's what I will be looking for. People are just hodling the entire time. While I think that's wise for a portion of a portfolio, I do think there is a lot of alpha to be earned in these massive swing trades. Not to mention, if Bitcoin does 100% gain, right? A lot of these alts will do a 200, 300, 500% type move, which obviously there's a lot of room for a lot of alpha. The last thing I will say before we move off of this topic is if we go back to 2015, we saw the big rally off of the lows here, where we actually came up pretty high. I mean, this was a really big move, but then we sold off, not to new lows again, but we came up 84% and then came down. That would have probably caught a lot of people off surprise. then once again up and back down, and then we came up, hundreds and then thousands of percents. So I do want people to understand that just because we are having the rally, that does not guarantee that we're going up 200%. But it does look a little bit more like probably the 2018 scenario is playing out, is especially once we break that downward resistance, which is exactly where we are sitting right now. The thing that is going to help this, this thesis is the dollar continuing to drop, which I'm really surprised that it did not bounce off of this, because we did have a little bit of divergence, and that was at a decent level of previous support that I thought was going to provide a little bit of a bounce. It did actually bounce, but it quickly snapped back down, and now we are down to the next level. If we do break about 101.4, my next level is all the way back down at 94.6. So this is really helping assets, because remember, when we're looking at the Bitcoin price over here, what are we looking at the price? BTC USD. So when US dollars go down, it makes it easier for assets to go up. Okay, so we do want to continue to see this dollar coming down. That is going to help assets immensely. Now, this is the huge chart that I want to point out that I think is really, really important. What we have right now is a descending wedge right now. Okay, and if we actually look at this chart, we've got multiple things going on. Okay, we've got a broadening descending wedge. We have an inverse head and shoulders. We got the left shoulder, the head, the right shoulder, and now we are touching resistance for the 5th time in a row. Not to mention, we have multiple divergences on many different indicators. And I'm not a huge indicator, type of a guy. I'm more of I want to look at price action and chart patterns, because that's ultimately more accurate than just pointing to indicators. But you can I specifically use divergences to increase probabilities of specific trades and sizing of specific trades to understand what likely the actual risk reward is going to be on that given trade. So we are sitting right at a point where we could break this. If we do, which I think we actually are, because of the divergence, the dollar dropping, there's a lot of things on the macro side of things where, rate hikes are slowing down, inflation's coming down. There's a ton of groupthink. We've had all-time highs for the put to call ratio, all-time highs for put premiums, which shows that a ton of people, not just retail, actually institutions as well, which a lot of big money is not always smart money. It is typically smarter than retail, but retail is absolutely at all-time highs for them betting on the downside, which is one of the worst times I think they could potentially do that, because you got to realize that markets are forward thinking. Okay, so everyone sees that the Fed, inflation's coming down. The Fed is slowing down from 75 basis points to 50. Now everyone believes they're about to be at 25 because they have hinted at 25. And then what comes after 25? Potentially a pause. And then that pause is then insinuating a potential pivot and drop of interest rates. So everyone is pricing that in a year in advance. That's how financial markets work. They price in the future of what is going to happen 9, 12 months into the future. Okay, it's not exactly right now, which is what we need to price in. Markets are much smarter than that. Okay, if you start to make decisions on the current data, you are always going to be the sucker that gets stuck in a terrible trade, a terrible position, because you are making decisions 12 months behind where all the smart money is making the decisions. So we are having a really big move. We just broke above the resistance that we've had for an entire year now. And it seems that we did just come back down and touch that resistance and use it as support, which is a really key technical level that you want to see. You want to see that strong bounce off of that resistance, because when you flip resistance into support, that provides a really big springboard for that to then advance upward. So I do want to see that price action continue in that direction for the remainder of this week. If we do see that, I think that we see the S&P potentially approach previous all-time highs, maybe even a double top, and then it's really going to depend on what is happening with the Fed and what is going on in the macro. And then, I'll make a decision on what the probability is of certain things happening then. But, I'm not going to predict the price of the S&P going to 6,000 or, whatever a lot of other people do. I am just playing one step at a time because things are always subject to change. There's so much that goes into macro and fiscal policy, and then obviously price action on an index of the 500 largest companies inside the United States. So I think there's a lot of headwind. And also I made a Twitter thread on Twitter about 9 reasons why, which did not include the dollar region. So honestly, 10 reasons why I do think we are bound for a rebound on the S&P 500, which is going to propel Bitcoin even higher. So, and that's why I do think that there is an actual decent potential that we do see Bitcoin trade upwards of the 48K type of a range over the next 6 months. Okay, so that is my personal opinion. I think a lot of that price action is likely to take case this quarter, especially looking at previous price action in 2018. This was about a 90-day move from like where we really started to break up. Okay, this was 89 days from when we really had the strong move all the way to the top in 2019 at 14K. So I do think a lot of this price action is going to take place in the first quarter of this year. And then the second quarter, I think, is when we really start to get the ranging type of market. And then we'll see, what the S&P and what the dollar and macro environment looks at, just taking stuff one step at a time. So I want to show you that chart that is incredibly important right now, because I'm telling you, I think a lot of people are going to make a really terrible mistake. I am in the position that I personally believe, which is not financial advice, just what I personally believe based on everything that I study. And I'm not a type of guy that just looks at technicals, just looks at macros. And then on the crypto side, I'm only on chain. No, I like to bring everything together to formulate my own personal opinion on the facts and the data that I'm seeing. And me personally, I do believe that we are going to have this relief rally. And then I do think that we are going to have a very substantial sell-off, a sell-off that is even bigger than what we experienced this year, because this year was only like a mid-20s, I think, 28% sell-off in the stock market, which really isn't that big. It is definitely a bear market. It's over 20%, but it wasn't quite, anywhere close to a 2008 to 2000, which, by the way, that does not happen all the time. Okay, so everyone that's always calling for a 60% sell-off, that is very rare. That does not happen every 6 years. Bear markets happen and recessions happen every 6 years on average, but you don't see the 50+% sell-off all the time. I do think that we do get that though at some point after we hit the S&P comes higher, and I'll tell you when I think we're going to see that, which is when the Fed actually pivots. If we look at the previous data, which, by the way, I'm not even sure who this chart is from. I saw this months and months ago. I'm guessing their name is in the bottom right-hand corner. I don't even know if I follow them. Somehow I found this chart. Thought it was very, very interesting. Bottom of the chart is the S&P 500 drawdown, okay? So what is the actual drawdown is like, what is the percentage loss from the previous high for the S&P, okay? And if you look at after the Fed pivots, okay, which is these purple triangles up in the top left-hand corner. So you see the federal funds effective rate at the top, right? Once that purple triangle shows on the chart, that's where the Fed actually pivots. Now look at when the big drawdowns happen, guys. The big drawdowns happen after the Fed pivots. Bam, Fed pivot, drawdown, pivot, drawdown, pivot, that's one exception right there. Not a massive drawdown, which this is not 100% bulletproof, just like anything else. Okay, the pivot, huge drawdown. That was, almost a 30% drawdown, is similar to what we had just experienced. Pivot, another bigger drawdown, double pivot, and a huge drawdown all the way down to above 40% drawdown. And then you'll see it time and time again. And there are little exceptions, right? One, I pointed out one earlier. This is another one, 3. So really like 70, 80% of the time, I would even put it maybe even 85% of the time, you are seeing a huge drawdown. I mean, look at this back in 2000. The pivot, and then a massive drawdown, one of the biggest ones that we've ever seen, approaching about 46%. And then once again, the Fed pivot in 08, everyone was, thinking that we are clear. Oh my God, they're dropping rates. That's great. That means that money is going to become cheaper. And that means that businesses are going to borrow more money, and people are going to borrow more money. People are going to spend more money. GDP is going to go up. Free cash flow is going to go up. All equity prices are going to go up. It did the exact opposite. And the reason is because these things take longer to play out than you think. Everyone is so quick to be like, oh yeah, the Fed just did this, so now this is exactly going to happen. And in reality, it takes a lot of time for the ripple effect to play out. Because you got to think how many variables are involved in massive drawdowns and recessions and depressions. A lot of variables involved, guys. Not just one simple, the Fed, dropped the rates 1%. Now, next week, we can expect XYZ to happen. That is not how it works. But you'll see that usually everyone thinks the Fed pivot is a big deal. It is 12 months before it happens. And why is that? Because everyone's again projecting that is going to happen in the future. They're pricing that in early, which is exactly where I think we're at now, because the Fed has said we're keeping rates high the entire year this year, and then likely going to drop them into next year, which they don't always do what they said. But I think that is a decent chance of happening, at least for the next 6 months. I think rates are going to be high. And I think that people are starting, and especially the market and the smart investors are starting to price in this potential pivot before it happens. Once the pivot happens, I think we see a pretty big sell-off. Let me know what your thoughts are down below. Maybe you have a different thesis backed by data. Please don't give me your personal emotional opinion, because I could care less. If you bring some data to the table, I would love to hear that. Always open to hearing different opinions. I could care less if prices go up and down. I'm positioned in a pretty good place that either way, I'm going to benefit from it. And I hope you are too. But let me know if you got some other facts and data you want to share. And also, maybe you don't. Maybe you just like this video. Let me know what you liked about this video. Maybe you hate my face. Let me know that you hate my freaking face in the comment section below. Thanks so much for watching, and I'll see you here on this next video.